Imagine a world in chaos. Markets plummeting, headlines screaming recession, and panic spreading like wildfire. Now what if I told you that within this chaos lies a treasure trove of opportunities for the bold and the savvy? Welcome to the world of crisis investing, where the greatest fortunes are often made during the darkest times. Economic crises are not a new phenomenon. History is peppered with examples where markets have crashed, only to rebound stronger than ever. Understanding the cyclical nature of these events is crucial for any investor. Take the Great Depression of 1929. While it wiped out millions of investors and led to widespread poverty, it also birthed legendary investors like John Templeton. Templeton, seeing opportunity where others saw despair, bought stocks at rock-bottom prices. His mantra? Buy at the point of maximum pessimism. Fast forward to the 2008 financial crisis. The collapse of Lehman Brothers sent shockwaves through the global economy. Yet this period also saw the rise of investment giants like Warren Buffett, who famously invested $5 billion in Goldman Sachs, a move that paid off handsomely as the markets recovered. Another noteworthy example is the Asian financial crisis of 1997. Countries like Thailand, South Korea, and Indonesia faced massive economic downturns. However, savvy investors who entered these markets when they were at their lowest points saw substantial returns as the economies recovered over the next decade. So how do you identify opportunities amidst economic uncertainty? It starts with a keen understanding of market cycles and an ability to spot undervalued assets. During the dot-com bubble burst in the early 2000s, Amazon stock plummeted from $107 to just $7. Many wrote off the company, but those who recognized the intrinsic value of Amazon's business model reaped massive rewards as the company became an e-commerce titan. Key point: look for companies with strong fundamentals, robust business models, and the potential to weather the storm. It's about distinguishing temporary setbacks from permanent damage. During the COVID-19 pandemic, we saw similar patterns. While travel and hospitality sectors were hit hard, tech companies like Zoom and e-commerce platforms like Shopify experienced explosive growth. Investors who identified these shifts early on capitalized on the changes brought by the new normal. Being a successful crisis investor often means going against the grain. When everyone else is selling, the contrarian is buying. Consider the example of Howard Marks, co-founder of Oaktree Capital Management. Marks is known for his memos, where he often emphasizes the importance of contrarian thinking. During the 2008 crisis, while others were fleeing the market, Marks was buying distressed debt, positioning his firm to profit immensely during the recovery. Another classic example is Sir John Templeton during World War II. At a time when the world seemed on the brink of collapse, he bought shares in every company trading below $1 on the New York Stock Exchange. His contrarian bet paid off handsomely in the post-war economic boom. During the European sovereign debt crisis in the early 2010s, investors like Michael Hinsa took contrarian positions by investing in distressed European bonds. As European economies stabilized, these investments yielded significant returns. Of course, crisis investing isn't without risks. The key is to manage these risks while positioning yourself for significant rewards. Take Bitcoin during the 2020 COVID-19 pandemic. When markets crashed in March 2020, Bitcoin's value dropped by almost 50%. However, those who invested during this dip saw unprecedented gains as the digital currency surged to new heights in the following year. It's about calculated risk-taking. Diversification, thorough research, and a clear exit strategy are crucial components of a successful crisis investment plan. Diversification helps spread risk. For instance, during the oil price collapse of 2014 to 2016, while energy stocks plummeted, investors who diversified into renewable energy and technology stocks saw their portfolios stabilize and grow. Keep an eye on economic indicators, news, and market trends. Knowledge is power. Analyze fundamentals. Look beyond the noise and focus on companies with strong balance sheets, low debt, and a history of resilience. Diversify. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes. Have patience. Crisis investing requires a long-term perspective. Be prepared to hold your investments until the market recovers. Stay calm. Emotional decisions are often detrimental. Stick to your research and investment plan. Studying the strategies of successful crisis investors can provide invaluable insights. Read the letters of Warren Buffett, the memos of Howard Marks, and the philosophies of John Templeton. These seasoned investors have weathered multiple crises and emerged stronger each time. Reading books like The Most Important Thing by Howard Marks and The Intelligent Investor by Benjamin Graham can also provide deep insights into the mindset and strategies needed for crisis investing. In recent times, geopolitical tensions and global pandemics have created unique investment opportunities. For example, during the trade tensions between the United States and China, many tech companies faced short-term setbacks. However, investors who recognized the long-term growth potential in technology and 5G networks made strategic investments that paid off as these sectors continued to grow. The rise of ESG, environmental, social, and governance, investing also highlights how crises can shift investment trends. Climate change and social justice movements are driving investments into renewable energy, sustainable agriculture, and companies with strong social governance policies. Economic uncertainty is inevitable, but it also opens doors to incredible opportunities. Are you ready to seize them? Dive into the world of crisis investing, educate yourself, and start building a strategy that can turn market turmoil into triumph. Explore, learn, and take bold steps. The next financial crisis could be your greatest opportunity. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. See you in next video.